Bonjour et merci pour votre présence. Aujourd'hui, nous allons vous présenter le troisième épisode de la série sur la transition SIDOR, produite par le groupe de travail sur le taux de référence complémentaire pour le marché canadien, que l'on nomme TARCOM, en collaboration avec le groupe TMX. Je suis JP Mendes, directeur des changements réglementaires à la Banque Scotia, services et marchés mondiaux, et je co-préside le sous-groupe rayonnement et communication du TARCOM. Je vais revenir sur un point important, annoncé par mes prédécesseurs. La fin de Sidor est un événement imminent et nous devons tous nous y préparer. L'ampleur du changement et les enjeux sont considérables. Pour ma part, notre mission est claire et concise. Informer et éduquer les participants de marché et le public sur les étapes clés de la transition de Sidor vers CORRA. Nous espérons que cette série de vidéos vous permettra d'avoir une vision claire et compréhensive de la transition du taux de référence sensible au crédit bancaire canadien, qui est le taux SIDOR, vers le taux de référence sans risque canadien, qui est le taux CORRA. La seconde vidéo de la série a mis l'accent sur la transition des dérivés de taux canadien vers CORRA. Aujourd'hui, nous allons aborder un tout autre volet qui est la transition des titres au comptant. Un panel d'experts a été constitué pour échanger autour de cette thématique. Dan Parrack, directeur général de la Syndication des dettes chez CIBC Marchés de capitaux, est le modérateur de cette session. Dan co-préside le sous-groupe des titres au comptant du TARCOM, le sous-groupe qui est lui aussi est présidé par Jacqueline Zito, qui est directrice du programme d'investissement chez Cancel Investment Council Limited. Je vais désormais céder la parole à Dan ainsi qu'à ses invités pour qu'ils nous présentent les réflexions sur les opérations sur titre comptant, sans oublier les obligations à taux variable, billets structurés, titrisation et titres de capital pendant la période transitoire et les enjeux auxquels nous devons faire face avant l'échéance du 28 juin 2024.
Welcome, everyone. My name is Dan Parrack, and I'm a managing director and head of Canadian debt syndication with CIBC World Markets in Toronto. I'm also the co-chair of CAR's Cash Securities Subcommittee, along with Jackie Sato from Canso Investment Council. On behalf of CAR's subcommittee, I'm pleased to introduce today's webinar discussing the transition of Canadian cash securities to CORRA. The agenda for today's discussion will include an introduction of today's panelists, a brief overview of CAR's Cash Securities Subcommittee, its mandate, and its work completed to date, followed by a discussion with our panelists regarding the transition to CORRA as seen through the lens of dealers, issuers, and investors. With no further ado, I'm delighted to introduce some of my fellow subcommittee members and panelists for today's discussion. Greg McDonald, Head of Canadian Financial Institutions Origination at TD Securities. David Weingarten, Senior Specialist, Treasury, Canada Mortgage and Housing Corporation. Yatendra Killer, Vice President, Treasurer and Compliance Officer at Honda Canada Finance Inc. And lastly, Carl Pelland, Vice President, Fixed Income and Co-Head of Corporate Bonds at Addenda Capital. Before we dive into the questions for our panelists today, we believe a little context may be important for those tuning in. CAR's Cash Securities Subcommittee was created in January 2022 and includes representation from Canadian dealers, investors, and issuers. The subcommittee's mandate includes four primary items. First off, to determine the scope of affected C-dollar securities with CDOR exposure past the CDOR cessation date of June 28, 2024. The committee determined this number to be just over $145 billion between corporate, government, and NHA MBS securities. Structured notes were not part of the scope of the committee work. Number two, to recommend consistent fallback language and issuance conventions for all new issue securities ahead of June 2023's deadline, the date when the Canadian new issue market will no longer be able to issue CDOR-based securities. Number three, to recommend a solution for those securities deemed tough legacy. Tough legacy securities are those with CDOR exposure past June 2024 with no or insufficient fallback language. Lastly, to educate the market on recommendations and communicate timelines as they become available. The committee's progress to date has resulted in the near completion of standardized term sheets for CDOR and CORRA-linked securities that will be published shortly via the Bank of Canada and CAR. The goal of which is to provide consistency amongst offering documentation going forward, regardless of issuer or originating dealer. The second main item will be the introduction of a market notice intended to identify potential tough legacy securities and recommend a collaborative solution between investors and issuers to amend documentation in an effort to promote transparency and market efficiency come June 2024's CDOR cessation date. Now, with that background in hand, let's open the floor to a discussion. My first question will be directed at Greg McDonald from TD Securities. From a dealer perspective, Greg, how have you been able to assist clients looking to issue new securities during the transition from CDOR to CORRA?
Sure. Hi, Dan. And yeah, a very good question. And you know, I think firstly, I would just have to acknowledge that Canada has benefited greatly from viewing and watching the transition from US dollar LIBOR to SOFR. It did allow us to skip a lot of the suboptimal calculation methods that were tried and were dropped in the US dollars and move quickly on to a standard calculation method. I think during this period, the Canadian dealers played an important role in that they were able to communicate best practices and keep investors and issuers informed on what was going on globally in the transition to risk-free rates. Once it became clear that Canada was going to follow the rest of the world, or most of the rest of the world, and was also going to transition to a risk-free rate, CORRA, dealers became integral to the development of a robust fallback language, and also to keep investors informed on best practices that we're seeing in the market. You know, as we prepare for the end of CORRA, at the end of CDOR, at the end of June 2024, and perhaps more immediately, or the end of a new CDOR risk at the end of June 2023, dealers need to ensure that issuers are following these best practices, including adhering to and respecting the terms that were provided in our draft strawman term sheets as they prepared for the transition. And finally, just answer questions that issuers/investors might have about CORRA calculation. It's a little bit complicated for some of the people that are just starting to become familiar with it. I definitely want to make sure that the dealers are there to help you work through these processes. And I really hope at the end of this process that all the investors and issuers in this market feel that they were well informed from the dealer community and there are no surprises.
Well, thanks for that, Greg. It's good to have a leg up with other jurisdictions coming before us, and good segue there with the dealers are there to help as well. The second question, less about the new issue market, more kind of rear view mirror facing on the secondary market. So away from the new issue market, the committee's identified 24 existing CUSIPs in the secondary market that are considered tough legacy. How is the committee advising the market to approach these CUSIPs ahead of the June 2024 cessation date?
Sure. So, as you mentioned, there are just 24 securities, and I think the total notional is approximately $20 billion. I think first important to acknowledge that we are not going to be recommending a legislative solution. The number of issues outstanding and the notional really doesn't warrant a legislative solution. Also important to acknowledge that a number of these securities, I think all but one of these securities are currently paying fixed and can be called at par by the issuer prior to moving to a floating rate. So there is some latitude for the issuers to take action prior to having to pay floating. That brings me to the recommendations that we'll be bringing forward as a group. We've two of them. Firstly, and we hope issuers and investors can work collaboratively and jointly to make sure this is a smooth transition. But firstly, we would recommend that issuers look at a consent solicitation to allow for the inclusion of updated fallback language. We've seen this work well in other jurisdictions. An alternative path forward for an issuer may be to provide a statement of intent to the market that when and if a consent solicitation is required, they will seek one to update the language in the tough legacy securities.
Okay, thanks very much, Greg. That's Good to know that that's forthcoming. Maybe shifting to one of the leaders in the CORRA issuance arena, being CMHC. So a question for David Weingarten. The Canadian banks and CMHC have clearly been leaders in the development of the new issue market for CORRA securities. How has the CMB floating rate note program been going so far? And any insights into the issuance process for other prospective issuers? And any insights you can offer around the growth of the CORRA investor base?
Sure, Dan. So we're quite pleased with the progress of our CORRA FRN issuance so far, having done 3 issues in the last year with another one sort of around the corner. And I could say for the last year, there's probably 2 main takeaways that I've learned through the issuance process. The first one being the continued value of investor relations. We did, leading up to our inaugural deal last May, we did about 30 targeted IR calls with selected domestic and foreign investors, both to soft sound interest in our upcoming deal because we had less visibility than we would normally have leading up to a deal, but also to have a good two-way conversation and get feedback from what the investor base was thinking and sort of see if there were any patterns there. And quickly we learned or heard over and over again the same sort of 2 concerns, one being valuation, obviously, and then the second one being secondary market liquidity. So that was a very valuable takeaway and helped us tweak our issuance process a little bit, which was our second takeaway. So given it was a new product and the concerns around valuation, we thought we would add about 10 minutes of extra discussion time during the launch process for discussion with our lead dealer group on the pricing. As we know, there's a little bit more complexity with valuing and pricing a CORRA product, adding that CORRA CDOR basis to the mix, another layer. So we just felt like rather than rushing, we wanted to have a more fulsome discussion, get any points that we may have overlooked in sort of our old process. And also because we had, with a newer product, a little wider range of views than we would have normally seen in the CDOR space. And we've continued that extra time, even as those recommendations and pricing thoughts have tightened up subsequently. And I think it's borne out in terms of performance of our deal, in terms of investor participation. I can say in our inaugural FRN, CORRA FRN, we had 27 unique names in the book, and we've kept that into the low 20s in subsequent deals, whereas prior to transitioning, in the last year or so of CDOR-based issuance, we were sort of stagnating in the high teens in terms of unique investors. So we've, consciously made an effort to improve breadth of distribution, and we feel confident that as we build out our curve, continuing to issue CORRA-based FRNs, that both our primary distribution and also secondary market liquidity will keep improving.
Thanks for that, Dave. It's nice to see the number of investors cresting above the pre-CORRA level. So maybe shifting the focus of the conversation now to an element or an area of the market that's seen less flow on the new issue side with respect to CORRA FRNs is the corporate market. So this question is directed at Yatendra Killer from Honda. Pure corporate issuers have been noticeably absent from the CDOR new issue market, or CDOLR new issue market. How prepared are you to issue a CORRA-based security, given the fast approaching June 2023 date, where CDOR-linked securities will no longer be issuable? And any advice you can provide to issuers who are readying for CORRA-based issuance?
Thank you, Dan. Yeah, in 2022, Honda Canada Financing was absent in new issue market. That was directly the result of the supply chain issues that impacted the auto production. All our OEMs in the auto sector were absent from the market last year, basically. As a part of debt management, we issue CDOR index floating rate notes, have bank loans and credit facilities. We also have fairly sizable interest rate swap derivative portfolio to hedge out our interest rate risk. So we have quite a robust exposure to CEDO index debt and derivatives. As for CORRA readiness, last year we focused on ensuring our systems and business process readiness for the June 2023 CORRA deadline. The biggest challenge for us was our legacy IT system. It was a third-party vendor debt and derivative application that we were using. That was not CORRA ready for booking trades, calculations, or the monthly mark-to-market valuation that is required. Our vendor was very helpful, but we had to upgrade to their new enterprise application that accommodated CORRA, SOFR, and other indexes. It took over 6 months of Treasury's time to go through the process to migrate to a new upgraded platform, because in debt and derivatives, nothing has changed in a long while until now. So there was no material increase in system costs, but did require a lot of time and effort in confirming user acceptance testing and etc. We also reached out to our banks to support in verifying the calculations, and also benefited from our parent company, American Honda Finance Company's experience with the SOFR implementation. So we are now ready to issue CORRA-based floating rate notes. But the challenge that I think we may face will be to ensure there's a broad base investors are also ready to purchase CORRA-based floating instruments. And by that, I mean, they may be ready, but their systems have to be ready also. So that's the biggest challenge when we change into anything new in the marketplace. So.
Thanks for the insights, Yatendra, and hopefully some of CMHC's success can rub off into the corporate market. And I guess the advice is be ready and give yourself that lead time to get ahead of FRNs. Thanks for the advice. Okay. Lastly, we'll shift over to a very important piece of the puzzle, which is the investor perspective. And this question's for Carl Pelland. So from an investor standpoint, what do you see as the challenges as we approach the various 2023, 2024 dates? Any advice you can give to fellow bond investors on readying for the transition and supporting potential amendments to CDOR-linked issuance that occurred prior to the announcement of CDOR cessation?
Thanks, Dan, for the question. So first, I'd like to mention that even if there's a lot of challenges coming with such changes in financial markets, I've never seen so much work that has been done for investors leading up to the transition and introducing a new security. So the Bank of Canada and the industry players through different CORRA work groups have really been implicated across so many forums, either on the buy side, the sell side, and have been very open for feedback. So I would simply start by saying that and recommending to everyone to look at all the different information, publication documents, and go on the website that the CORRA groups have produced. They've been a great help to me, and they will be shown on documentation that will be shown in this webinar. So of course, a big part of the challenge in the transition is related to the logistics of the arrival of CORRA. So you really must make sure that all your systems that you follow financial markets with, you price securities, you do your portfolio accounting, your reporting, how you collect data are now suited for the new reality and the new securities. So most systems have already addressed these issues for the new securities, but just to make sure that everything is in place and all the links make your system work well together. Also, I'd like to mention that to not forget about the general education aspect about CORRA. Take really the time to make sure that all your colleagues are aware of the changes and that they fully understand the new securities. And I'm not only talking about just front office colleagues, but all colleagues within the different support functions. It will definitely help the transition if everyone can see potential implication and that they fully understand the new securities. There's also one simple thing to do, and it's really testing it. There are already securities out there live, like the securities from CMHC that David has explained earlier. So go out and test those in your systems, and also look at what has been done on the LIBOR software transition. So that it's all good examples to follow. And also, as Greg mentioned about legacy securities, just make sure that you identify if you have any in your portfolios to make sure if there's any additional work you have to do for the transition. Finally, as mentioned earlier, the cooperation within the industry on this transition has been very good. So all my colleagues here on this panel today have played important roles within the CORRA working groups. I've also worked with them to represent investors in those working groups. And I would like to tell investors that I'm totally comfortable in the new structures of the new CORRA securities that have been issued so far. Everything was planned efficiently and in good spirit by all members. And issuers and their representative, such as David for the CMHC CORRA securities that they issued, have done a great job to facilitate the process for us investors. And have shared their process leading up to issuance with the different key actors in the industry. So please, one thing that I would like to say at the end is that make sure to demand issuers or potential issuers to use the recommended standardized models for issuance, including fallback language that CORRA work groups have presented. These working groups have worked on it and looked through it and worked in details to come up with the best structure for the industry. And this will help us investors going forward to concentrate on pricing, risk, and evaluation of the securities. If we follow those recommended structures, we'll be able to concentrate on those rather to try to differentiate between the potential or existing structures. So on these recommendations, good luck to all investors in this transition.
Thanks for that, Carl. That's great. There is lots of literature available out there with Bank of Canada and CAR, and we do hope that the whole market uses the recommendations. It will create market efficiency going forward. So thanks for those comments. So that concludes our panel discussion for today. So with that, I thank you to all our panelists for joining the discussion. To wrap up today's topics, we'd like to leave you with a few takeaways with respect to CORRA transition from the cash securities perspective. First off, as of June 2023, the Canadian market will no longer be able to issue CDOR-based securities, so issuers need to be versed in appropriate fallback languages or issue versus CORRA directly. Two, the introduction of standardized term sheets with recommended fallback language will be made available in the near future via the Bank of Canada website and CAR. Three, a collaborative approach between issuers and investors may be needed to amend existing documentation of tough legacy securities existing in the market. A market notice should be forthcoming via the Bank of Canada and CAR with respect to this item. And lastly, education will be key to ensure issuers and investors' preparedness for the transition to CORRA. Canada has had the benefit from seeing various IBOR transitions occur in other jurisdictions, but it is still incumbent on all market participants to be informed. To the viewers of today's webinar, thank you for watching. If you have further questions, please feel free to reach out to the list of contacts at the Bank of Canada, CAR, or a member of the Cash Securities Subcommittee. With that, have a great day.
Merci encore d'avoir pris le temps de visionner cette vidéo. Nous espérons que vous avez pris le temps d'apprécier les points clés qui ont été mis en avant par nos experts sur la thématique des titres au comptant et qu'elle vous a donné un clair aperçu des mesures et des défis auxquels nous sommes confrontés. Avant de clôturer cette session, j'aimerais revenir sur quelques points importants. Dans un premier temps, à partir de la fin juin 2023, le marché canadien ne pourra plus émettre des titres au comptant basés sur CDOR. Il est vivement recommandé d'inclure des clauses de repli pour les titres fondés sur les taux CDOR afin qu'ils puissent transiter vers CORRA. Pour cela, Une étroite collaboration est essentielle entre les émetteurs et les investisseurs pour faire face aux titres considérés problématiques, mais aussi élaborer des ressources éducatives des deux côtés, émetteurs et investisseurs, pour préparer une transition claire et ordonnée. Nous vous remercions pour votre attention et vous prions de rester connectés. Cet épisode s'achève. Le prochain portera sur l'élaboration du taux CORRA à terme. On compte sur vous.